5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Hot pursuit. Paramount Skydance makes a hostile takeover bid for Warner Brothers to torpedo Netflix's deal. China-bound Nvidia wins President Trump's approval to sell H200 chips in China. And markets look to JOLTS data as the FOMC begins its two-day meeting in Washington. So let's take a look at those markets on this first of those 2 days. John Author is pointing out that it's really not the rate cut, which we're very, very likely to get this time round. Traders will be focused on. It will be the descents and also the SEP, the dot plot, and how much dispersion will we actually see and how are we going to interpret that, or more importantly, how are markets going to interpret that? So as you can see, not moving too much on futures. We were down slightly yesterday, about 1/3% or a little more apiece for the S&P and the Nasdaq. But let's take a look at bonds, because yields now on the 2-year in particular are at 10-week highs. We're up to 4.16 here on the 2-year. We hit 4.17 in fact yesterday. This hawkish tilt from central banks around the world, including what's likely to be a hawkish cut this week from the Fed. But of course we know the BOJ. We were talking to Isabel Schnabel of the ECB yesterday, talking about the next move being a hike. Well, it's all putting upward pressure on those yields. We'll keep an eye on all of that. We're going to be speaking with Silverman about volatility too in just a little while. But first, let's get to some individual movers. And for that, we'll go across to London and Valerie Teitel. Val.
Good morning, Bonnie. Let's start with a check on the drama in the entertainment space. This hostile bid launched by Paramount, and we're still seeing the positivity in Paramount shares continue in the pre-market session. Paramount shares jumped 9% yesterday on the back of that news of the hostile bid. They're up another 1.3% today. Netflix on a back foot, but only just slightly down 0.3%. And the real winner of the bidding war is what they're bidding on. Warner Brothers Discovery in the green again today, up 1.5%. Let's move on to Nvidia. As you mentioned, they've got the approval from the Trump administration to sell a H200 AI chip into the China market. Nvidia shares feeling some positivity this morning, up some 1.6%. This is largely seen as a win for the CEO, Jensen Huang, who's been largely lobbying in Washington against these export restrictions, and Nvidia gaining some of that market share back in China. Lastly, let's head over to Germany and talk about the defense trade. Now, while defense stocks have really been outperforming this morning off the back of a German spending pledge for defense, we are seeing ThyssenKrupp really on a back foot, down nearly 10% after they gave some weak guidance and also said they will be turning into a loss in the next fiscal year. This comes amid a broadness in the auto sector, which this German defense company is exposed to. Shares have risen around 200% so far this year, Vonnie, but it does seem like there are still some winners and losers in the German defense story. Bonnie?
Absolutely. Val, thank you so much for that roundup. Much appreciated. And coming up in this hour, we'll bring you my interview with the Deputy Prime Minister of Greece as well. Plus, we speak with IATA Director General Willie Walsh, and Silverman of RBC Capital Markets joins. But first, Paramount makes a hostile bid now for Warner Brothers.
I have to see what percentage of market they have. We have to see the Netflix percentage of market, Paramount, the percentage of market.
Joining us now is Bloomberg's Manuel Maigori. I guess a hostile bid can be sometimes more dramatic than just a regular bidding process. Manuel, what can we expect? What comes next in a situation like this?
Yes, Bonnie, definitely dramatic and super interesting, fascinating for us to watch and to continue to monitor and try break news on this ongoing saga. It is really a very, very transformative, important, critical deal, and Paramount now going hostile makes it even more interesting, isn't it? The next steps remains to be seen. The next few days will be critical. All the players here are going to keep the cards close to their chest as they try to analyze and bring to the table different types of sweeteners to make a more compelling offer. Obviously, we have two offers on the table, Netflix and that is the agreed deal with Warner Brothers. But obviously now Paramount's cash offer, $30 a share, could also raise questions, especially with shareholders, that may potentially increase pressure on the board to reconsider, given that it's an all-cash proposal from Paramount. So we'll see now what happens. Warner Bros. Has 10 days to respond to that bid from Paramount, and then the next steps either from Warner Brothers in their response and also potentially from Netflix if they consider any sweeteners for their agreed deal. I think it remains to be seen also what happens with the regulatory landscape. Donald Trump has been pretty vocal about the potential questions around antitrust and the market share of the combined Netflix Warner Brothers entity, and that may also give a little bit more leeway, a little bit of an advantage for Paramount, given that the combination of those may be a little bit easier for regulators. But it's still too early to tell, and definitely want to watch closely. There is so many twists and turns on this one, Bonnie, that it just makes it fascinating for us.
A real soap opera, a real streamer, if you like. Manuel, there had been reporting that John Malone in particular, but also obviously David Zaslav, wanted that $30 per share, and that, you know, they had been told they wouldn't get it and so on, but they are getting it now. And there are also very good arguments being made on the part of David Ellison for why it should be Paramount and not Netflix. I mean, will they hold water with regulators?
Yeah, I mean, it depends. It comes down to the market share and also the proposals, the business plans from both companies, and ultimately what the impact for the consumer might be. Obviously, regulators will take a very close look at this. It's not necessarily going to be a smooth path to getting the deal completed with either of the parties, given the tremendous, scale of these transaction. But obviously with Netflix, there is being already some concerns being raised. It remains to be seen what the impact might be with Paramount, even though the combination in theory may present less of a hurdle. But obviously two different proposals. Also super interesting, Bonnie, to see Paramount's backers, right? We see Jared Kushner in there, also the likes of Apollo and some Middle Eastern sovereign wealth funds, as well as some US banks. So definitely kind of like a fascinating proposal that Warner Bros. Has on the table as well.
All right, well, we have 10 days. Manuel, thank you so much. Manuel Baigori there. Nvidia gaining in pre-market trading as President Trump grants the company permission to ship its H200 AI chip to China in exchange for a 25% surcharge. The president posting on Truth Social, quote, "This policy will support American jobs, strengthen U.S. manufacturing and benefit American taxpayers." Joining us now from Washington is Mika Solner of Bloomberg Government. So, Mika, as Javier Blas of Bloomberg Opinion just tweeted out, chips for soybeans. I mean, is that what this is? Is this a deal?
Yeah, essentially, President Trump is making this a national security argument. The president has been very adamant on improving his relationship, the U.S.'s relationship with China. He's poised to meet Chinese President Xi Jinping in the spring, even, which will be a huge monumental step for the U.S. But the president is really trying to, improve that relationship when it comes to trade. And because the posturing of China when it comes to buying U.S. soybean products and easing down on some of the tariffs that the president has imposed initially, it seems like that Trump is making nice here.
Yeah, it remains to be seen how many of these chips China would actually buy in the event that this all goes through and China wants them. Now, Trump is also threatening new tariffs on Mexico over water, on Canada over fertilizer, and on India over rice. What are these targeted single-item tariffs?
Yeah, absolutely. I mean, I think tariffs have always been a way that the president has to try to, his argument is to create a fair relationship with a lot of these countries. But I do think that is one of the ways that the president has really utilized his bully pulpit and bring U.S. Into these markets. He's saying that this is going to have really good impact in return rate on the U.S. But obviously, the administration is also closely monitoring that Supreme Court case when it comes to tariffs. And this is going to be a huge deal as well in terms of what is actually decided there when it comes to the IEEPA tariffs.
Yeah, let's actually show everybody what Trump has been posting on Truth Social about the importance to national security of this SCOTUS decision. I mean, it proves that he's angsty about it, right? I mean, he can't have any sway over SCOTUS, but certainly posting on Truth Social would make it seem like he's thinking about this.
Yeah, absolutely. The president actually discussed this yesterday during a meeting at the White House, where he said that if the Supreme Court does decide to strike down his tariffs, they can find other ways to try and impose this, but it's not going to be as strong and it's going to be slower. So they're really, really closely monitoring the decisions that are made here, and I think that Trump is trying to put some pressure on what he believes is to be friendly justice. But as we know, the Supreme Court is its own entity, and it's going to decide what it is. And right now, I think that, there's people that are optimistic within the White House, but there's a lot of skepticism as well.
Exactly. I love the way he puts it, that we would be financially defenseless if SCOTUS were to decide against his tariffs. Mika, thank you so much. Mika Solner of Bloomberg Government there in Washington. And European defence stocks rallying for the most part as Germany is set to approve 29 military procurement contracts worth a record $61 billion next week as part of the government's push to build Europe's strongest conventional army. Joining us with the latest is Bloomberg's chief Europe correspondent, Oliver Crook. So Germany building up its Bundeswehr once again, Ollie, but in fact, Germany's army is absolutely not the strongest even in Europe, right?
Well, I mean, it depends how you look at it. Certainly in terms of number of personnel, in terms of historic spending, the Germans have, underinvested in their military for many, many, many years under Angela Merkel. That peace dividend that they were getting from no war in Europe, getting cheap gas from Russia. And that was a policy that really changed under the former Chancellor Olaf Scholz during this sort of famous speech he gave after the invasion of Ukraine, the Zeitenwende, meaning the turning point in sort of historical Germany to really reinvest in their military. And this is an example, Vani, of the Germans really putting their money where their mouth is. We're talking about orders of about 52 billion euros being approved by the Bundestag possibly next week. We should say in 2021, the year before the invasion of Ukraine, the German military only spent in the entire year 47 billion. So that just gives you the size and the scale and the speed at which the Germans are now deploying this. We have some information on where they're actually going to spend it. 22 billion of it is going to go on basic military gear and clothing, 4 billion on Puma infantry fighting vehicles, 3 billion on aero defense system from the Israelis, and about 2 billion for surveillance satellites. And we should say, Vani, this is very important, obviously, for the Germans, but it's also won them a lot of praise from the United States. We've heard a number of officials, I've spoken to a number as well, saying that basically Germany is now a model ally. And that is something that you don't hear a whole lot from the Trump administration, from many people in Europe. So for the Germans really sort of hitting the ground running, and we should say that this gives a huge amount of confidence for German industry and for many of these defense companies within Germany. I spoke to the CEO of Rheinmetall last week, and unlike a number of other of these sort of defense companies within Europe, he's really putting his money where his mouth is. 13 new factories, doubling, sometimes tripling output, and that's all down to confidence that Germany will spend the money, as we see they're doing today.
Yeah, as Chancellor Merz said, we want to be able to defend ourselves so that we never have to defend ourselves. Let's move to the European question over Ukraine and funds that will be appropriated in order to help Ukraine with reconstruction. Leaders increasingly confident they will reach that deal to use those frozen assets. How are they going to reach a consensus, Ollie?
Yeah, so listen, this is after a conversation that we had in London yesterday between Zelensky, Macron, Starmer, and Friedrich Merz critically. And that comes after Friedrich Merz came to Brussels, came here, and met with the Belgian Prime Minister, who, remember, has been the big hurdle in terms of blocking access to these assets, because the Belgians, where many of these assets are held, want basically assurances that they won't be on the hook for all of the money in case something happens, in case there's a legal proceeding and they need to pay some of that money back to Russia. There has been basically zero progress on that for a long period of time. It seems now, according to these leaders, that there has been a breakthrough. That being said, Vani, a couple footnotes. We have not heard from the Belgians yet, so we don't know that that is 100% across the line. But we should say, when I spoke to Zelensky a couple of weeks ago, he talked about the Russian assets and the funding from those assets as a matter of survival for Ukraine. 90 billion euros goes a massive distance in terms of funding the war effort. But Vani, even if you are close to a peace deal from the United States brokered by the Trump administration, the difference between sitting across the table from the Russians with $100 billion in your bank account and zero is massive in terms of your negotiating position.
For sure, particularly now that he has absolutely drawn a red line. They are not ceding territory. Ollie, thank you so much. Oliver Crook, chief Europe correspondent for us. Now to all the top stories trending on the terminal this morning. The European Union investigating Google over concerns it has abused its dominance by using its AI tools to squeeze out competition. The Commission said it will look at whether the firm has distorted competition by imposing unfair terms on content creators. The investigation will also look at whether Google pays web publishers appropriately for using their content to generate AI overviews and AI mode. Nomura Asset Management is planning to relocate dozens of staff from its Tokyo headquarters to cities such as London and New York. The move is part of a push to develop homegrown talent for investment and sales operations. And military tensions between China and Japan have reached their highest level in more than a decade. Japan is quickly putting in place missile batteries, radar towers, and other combat facilities on an island chain near Taiwan. Coming up, Greece seeking to become a gas transportation hub as Europe works towards a complete ban on Russian supplies. We'll bring you my conversation with the Greek Deputy Prime Minister next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Greece looking to bolster its position as a gas transportation hub in Europe, signing deals with the US and American companies. I spoke with the nation's Deputy Prime Minister, Kostas Hatzidakis. Have a listen.
First of all, I have to underline that all these agreements, both as regards hydrocarbon exploration, but also as regards LNG, American LNG through Greece to Eastern and Central Europe, are extremely important politically, geostrategically for Greece, but also in economic terms. They strengthen the geopolitical importance of Greece. These agreements also contribute to further enhancing the Greek-American relations, but also to some extent, I would say, they reshape the energy future of Europe because they change the energy map to a significant extent.
For sure. Now, should we expect other deals in other areas, maybe defense or some other areas?
Greece has been a credible ally of the United States for many years. That has to do with foreign policy, of course, and with defense policy. We are already cooperating in a very productive manner. The Greek government and the American government are examining ways to further enhance our relations, including in the energy sector. Recently, the Greek energy minister visited the United States. He had a meeting with his counterparts in the Trump administration, and there are some ideas to further enhance our energy relations, but I would like to stop here and not to elaborate on this issue.
That was the Deputy Prime Minister of Greece, Kostas Hatzidakis. Coming up, Jamie Dimon forming a group of national titans to protect the US from foreign adversaries. That and what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Washington Post, Ukraine's President Volodymyr Zelensky ruling out surrendering land to Russia. The Post says the unequivocal declaration could mark the collapse of Trump's peace plan. Critics had condemned the plan as fulfilling a wish list of Russian President Vladimir Putin. Now, Zelensky did say that the current proposal has been stripped of, quote, explicitly anti-Ukrainian provisions. Next up, the Wall Street Journal is reporting Jamie Dimon is assembling a group of national titans and close friends to protect America from foreign adversaries. The group includes Jeff Bezos, Condoleezza Rice and Michael Dell. Diamond announced a $1.5 trillion initiative focused on national security back in October. The Journal says the CEO has long looked to play the role of a corporate statesman, and the ultimate impact of this whole plan will be unclear for years. And finally, the FT reporting that two of Boaz Weinstein's key funds extending a run of lackluster returns. His $1.9 billion flagship fund down about 6.5% this year as of November 21st. That fund bets on dislocations in the credit market. Another fund that aims to shield investors from market downturns is, of course, down this year as the market rises. Saba has had greater success in activist campaigns against closed-end funds. Saba declined to comment. Coming up, the Federal Reserve is set to kick off its two-day meeting. We'll push ahead to that meeting with Amy Wu Silverman of RBC. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Hot pursuit. Paramount Skydance makes a hostile takeover bid now for Warner Brothers to torpedo Netflix's deal. China bound. Nvidia wins President Trump's approval to sell H200 chips in China. And markets look to JOLTS data as the FOMC begins its two-day meeting in Washington. So let's check those markets. Typically not much happens the first day of an FOMC meeting, but there's lots of catalysts, including Oracle earnings tomorrow after the bell, as well as that FOMC meeting. As John Authors points today, the focus will be on so much more, not on the cut, which we do assume we'll get, but the descents and the dot plot. Now, we do have futures pointing higher after the S&P and the Nasdaq 100 started the week with small declines, about 1/3% for the S&P and 1/4% for the Nasdaq 100. Russell 2000 futures not really going anywhere. Let's take a look at the bond universe. I think TD Securities has the best note today, calling it talky-talky. That's the environment we're in right now, with the two-year yield close to a 10-week high there. We got to 417 earlier in the day. Yields rising, and it's not just in the US, it's across the globe as we see a hawkish tilt from central banks. Isabel Schnabel telling Bloomberg yesterday that, the next move will be a hike at the ECB, and of course we know the BOJ is all but ready to hike. So let's get to some individual movers now. Over to London and to Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with a check on the media sector. This fight over Warner Brothers has now reached a new level with this hostile bid from Paramount Skydance. We're continuing to see shares of Paramount Skydance trade very well. They were up 9% yesterday, up just shy of 2% in pre-market. A lot of this has to do with the fact that these new equity backers that they have found are foregoing their governance and not asking for any board seats. So it's looking fairly positive for Paramount Skydance. They do, in fact, clinch this deal with Warner Brothers, but a lot still to be worked out. We are all seeing all three of these contenders in the green so far to start this morning's pre-market session. Let's move over to the tech trade, especially Mag 7. Nvidia is leading the gains for the Mag 7. Shares up 1.9% off the back of the Trump administration's plan now to allow them to sell their H200 AI chip into China. The access to the Chinese market has been largely shut out for Nvidia this year. So that positivity around potential market share, gaining that market share back, is leading Nvidia shares higher in the pre-market. Lastly, let's head to Germany. German defense, always a big focus, but one of them is on a back foot, really underperforming the market today, and that's ThyssenKrupp. Shares are down nearly 9%. Some weak guidance in their results this morning. They are forecasting a contraction in sales in next year, and this weak guidance comes alongside more softness in the automotive sector that ThyssenKrupp is exposed to. It goes to show that there are still some winners and losers as we have this next stage of the European defense story. Bonnie?
All right, Valerie, that is for sure Valerie Teitel there in London. Let's get back now to Nvidia. President Trump approving the chipmaker to sell its H200 chips in China, but in exchange for a 25% surcharge. He posted on Truth Social, quote, "This policy will support American jobs, strengthen U.S. manufacturing, and benefit American taxpayers." Back with us from Washington now is Mika Solner of Bloomberg Government. It's so interesting to see a president getting involved in pricing, essentially, Mika. I mean, does he even know what Nvidia charges for these chips? And can Nvidia discount them if it really wants to sell into China so that the 25% surcharge doesn't hurt?
Yeah, I mean, I think that a lot of those details are still a little bit unclear and still being worked out. But while this is a big win for China, this is also, somewhat of a win for the U.S. when it comes to taking a large cut of those profits and those sales, like you mentioned there. But I know AI is a topic that's really, deep to the president. The president is very interested in the future of this kind of technology. He's actually going to have an executive order this week separate on AI. But it's really interesting to see his posturing towards China and letting them into the AI race.
Javier Blas of Bloomberg Opinion posting on X actually this morning after this news that this is really chips for soybeans. Is that what this is? That China can have the chips, assuming it wants them now, in exchange for more purchases of soybeans potentially? That's the understanding, at least.
Yeah, I think the president really celebrated some of the wins when it comes to trade agreements that he's made with the Chinese president Xi Jinping, and soybeans is a big part of that. Trump touted it as a win for American farmers, and so I think that he really wants to have a good relationship with China. The two leaders are poised to meet in the spring, and this is really a step in that direction. And I think that this is just all part of the administration's plan to improve U.S.-China relations.
If this works and if everybody's happy with this agreement about H200 chips, does this give the president more clout when it comes to what he's trying to do, which is apparently individual tariffs on things like rice out of India, water for Canada, Mexico, fertilizer for Canada, I should say, these individual small tariffs, 5% for Mexico, for example?
Yeah, I think it's very possible. I think the president has fostered his own unique relationships with world leaders, and he's been really trying to make compromises and listen to other leaders when it comes to trade and tariffs. I think we're going to have to see what happens there.
Mika, thank you so much for all the context. Mika Solner there of Bloomberg Government in Washington. Turning back to these markets, as we look ahead to the Fed decision tomorrow, RBC's Amy Silverman says Fed Day may be crucial for these markets, but even a cut only brings us a Santa grind at best. She's head of derivative strategy at RBC, and she joins us now. So, Amy, why just a Santa grind? Is it because we have a cut priced in at this point?
Look, that's a big part of it. And something that always amuses me to look at is just the volatility of how quickly we went, from no rate cut to a cut to no rate cut. So to some degree, the market already had the taper tantrum. Now, the toddler is getting what it wants, if you will, but it's unclear if there's going to be further upside from here, even if obviously what is priced in does play out. On the other hand, you've seen implied volatility levels really come in. You've seen skew melt. And so we're essentially priced for this to not go wrong. And so if something does come as a surprise, maybe more hawkish language, the options market certainly hasn't prepared for that aspect, Vonnie.
Yeah, I mean, you talk frequently about volatility potholes. We've definitely had some, Amy. Are there more to come, or are the big ones behind us, assuming we get the cut and, as you say, nothing surprises?
Look, I think this is a big week because not only is it going to be a week full of Fed speak, it's going to be Oracle earnings. I think those are, possible potential potholes if they do not go well for a lot of folks who have been looking to Oracle almost as a proxy for this angst around the credit issues. You really have seen this disparity in the credit spreads for Oracle versus the equity volatility. So that should be interesting, too. But outside of that, this is seasonally a time where volatility declines as we get into the holidays and just look forward to 2026.
Yeah, and at the same time, even if there is a tantrum in the works this week or something, I mean, we will get real signals about what the market thinks and the direction. I mean, you say CDS has become the proxy for its AI, trust us, angstiness. So if we do get Oracle tomorrow, we'll know a little bit in terms of credit quality implications and volatility, what's to come in 2026, no?
Yeah, exactly. So look, again, it has the potential for being a pothole, but if these things come through, I don't necessarily see that we're going to get a rip up because of it, because that is the expectations that are priced in. So, that's where the Santa grind comes. But it will go far to alleviate some of the fears that are in the market. And I think that's one reason why you've seen a lot of the option metrics come in. Now, that said, as we get into 2026 and there's just more dispersion, there's going to be more AI winners and losers. The market is going to, kind of dig in and start doing more homework. Then I do think, you continue with this paddling duck market where there are winners and losers underneath, and then that headline volatility might still look relatively complacent.
So how do options markets look now into year-end, Amy? Because we only have something like, 12 sessions between now and Christmas Day, and then just a few more after that with very low, participation.
Yeah, exactly. To give you kind of really how staggering these stats have come in. So if you just think about the cost of protection against the one standard deviation drawdown on the market a few weeks ago, when you think back to that day when you had that inflection point post Nvidia earnings and how the market really switched a flip on sentiment. You were probably in year-to-date highs from a percentile perspective on that cost of protection, and now we're back in kind of the 30, 40th percentile. So that really gives you a sense of how much metrics have eased, how much the market is just expecting what it's expecting. And, as we get into year end, some of that is unsurprising, Bonnie, because it is seasonally a time where volatility moves less when there's just more folks in there, when there's less folks in their seats during the holidays.
After Nvidia earnings, obviously Nvidia blew things away and it looked like we were all in the clear, and then suddenly we had this reversal in sentiment, and it was pretty crazy actually, and a lot of things were blamed, right? From, one day to expiry options I looked immediately at rates. There was a little bit of a tantrum going on rates too, but not as much as you might think. And then crypto was also blamed. Amy, is crypto a signal of anything these days?
I have to tell you, this is something that comes up more and more in client conversation. So, our joke is it doesn't matter what part of the market you started in, all roads at some point during meetings will lead to AI or will lead back to crypto. And I'll tell you, a few investors did point out to me that when you look at some of the moves that were surprising, again, if you want to go back to that Nvidia day to dissect that move, crypto was leading that move in terms of risk off sentiment. It really hasn't been this inversely correlated digital gold the way actual gold has been. It's been more of a sentiment marker, and it has been leading a lot of the sells that we then have. And what I think is interesting that I've heard as part of the explanation is when you think about both retail sentiment and crypto, it tends to be the same cohort that is playing it, that is going long these assets and maybe, assets in the prediction markets or zero DTE. And so that might explain some of why you're seeing those code movements.
Amy, we have to leave it there, but thank you so much. Always love chatting with you. That's Amy Wu Silverman of RBC Capital Markets. Now to other top stories trending on the terminal this morning. First up, Brookfield Asset Management and Qatar Investment Authority are teaming up on a $20 billion venture to invest in AI infrastructure in Qatar and select international markets. Brookfield will invest through its newly launched AI fund, which aims to mobilize as much as $100 billion of investments globally. Michael Burry, bullish on Fannie and Freddie. The money manager made famous in The Big Short, predicting the collapse of the US housing market, says he holds sizable positions of common stock of both government-sponsored entities. In a blog post, he said a relisting is, quote, nearly upon us. PepsiCo reached an agreement with activist investor Elliott Investment Management that includes a 20% reduction in its US product lineup. The company also planning layoffs to cut costs. Coming up, the International Air Transport Association says airline profitability is expected to stabilise next year. More on their latest outlook for the industry with IATA Director General Willie Walsh next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The just released by the International Air Transportation Association report, global airlines expected to earn record profit next year, even as supply chain issues persist. Bloomberg's Guy Johnson is with the IATA Director General for more. Guy.
Bonnie, thank you very much indeed. Yes, the Director General is Willie Walsh. He's in Geneva, and he joins us now after IATA published its latest financial outlook. Willie, good morning. Thank you very much indeed for the time. Willie, for the last few years, this report has been dominated by the Americans. They've led the financial league tables since, I think, probably COVID. Yet this year, it's the Europeans that have taken over. And next year, it looks like it's going to be the same story. Willie, what's changed?
Yeah, good morning, Guy. I think a couple of things. Obviously, growth in the US, in North America, has been relatively low compared to other parts of the world. Europe continues to do well. I think a weakening US dollar obviously benefits airlines who are not US dollar denominated. 50% of an airline's cost base is typically in the US dollar. So if you see a weakening dollar, it typically would benefit airlines in Europe. And, generally the demand for aviation in Europe is stronger than the US. So we see Europe in absolute terms overtaking the US. Still in margin terms, both are doing pretty well. And the airline industry looking at another good year in 2026.
Let's stay in the United States for a moment. The Federal Reserve is meeting in Washington, D.C. today. The Trump administration would like to see rates coming sharply lower, Willie. Let's talk about cost of capital. Say the Fed cut rates aggressively in 2026. How significant an impact would that have on the outlook for U.S. airlines?
I don't think it'd have a major impact. Obviously, the debt levels in all airlines increased during the COVID crisis, coming out of the COVID crisis. I think most airlines have done well to strengthen their balance sheets, but obviously the impact that it would have on consumer would clearly be beneficial. And I think one of the things we are seeing in the US is the weakening consumer demand as a result of the cost of living issues that have been highlighted there. So, it would have to have a benefit for the industry. I think it would accelerate some growth. But in reality, though, capacity has been constrained by other issues in the US.
Let's come on to those capacity issues in just a second, but just stay with the consumer for a moment. You've got a K-shaped recovery in America. The upper end of the income bracket is doing very, very well. The stock market is certainly helping, as a result of which they've been taking lots of trips abroad. The strong dollar has helped out with that. You referenced the fact that the dollar's beginning to weaken now. Do you think that kind of phase of Americans travelling abroad is going to peter out from here? We've seen certainly loads of them in Europe over the last few years. Is that about to change?
I don't think it is going to change quickly. And you're absolutely right. You look anywhere in Europe now, there's quite a lot of US travelers, and I think they've come to appreciate the value on offer in Europe. So the weakening dollar may discourage some people, but quite genuinely, if you look at, here I am in Geneva, the ski market we're seeing being really dominated by US travelers because the cost of vacationing in Europe is significantly lower than doing so in the US.
You mentioned a moment ago some of the capacity constraints that have been hitting the industry. Boeing and Airbus, obviously, are names that instantly spring to mind, but the engine manufacturers as well. What's been happening at Rolls-Royce, Pratt & Whitney, and General Electric to a certain extent, but less so, have been impacting this industry. Do you think these are businesses that command huge margins, Willie? And I'm just wondering whether or not you think the airline industry is getting the wrong end of the stick on this one, and whether things are going to improve from here.
Well, I couldn't put it better myself, Guy. You look at GE commercial engines margins for the first 9 months of this year, 27.6% at an operating level. The airline industry looking at less than 7%. So there's a big disconnect between suppliers and the people doing all the work. And that just is not sustainable. So, we're going to have to look more detailed at this because we've seen these margins increase in terms of GE, while, as I say, airline margins are pretty much stagnant. Net margins for us is about 3.9% this year, 3.9%.
Do you see some of the supply chain issues that have been hitting this industry over the last few years, just the availability of aircraft? Do you think that's going to improve in 2026?
No, I don't really see any significant improvement. We're still seeing constrained delivery issues there. We've estimated that the cost of the supply chain disruption for the industry this year has been $11 billion as a result of the delayed delivery of new aircraft, increasing fuel burn, increasing maintenance costs. So that will continue into 2026 and probably 2027 as well.
Willie, the Trump administration has just rolled back some of the Biden-era auto fuel regulations for the car industry. Do you think that would be a good idea for the aviation industry as well? Do you think regulation on fuel is too tight? Do you think both Europe and the United States should re-examine that? And if so, how?
Yeah, mandating fuel, the use of sustainable aviation fuel, I believe, is wrong. What we need to do is to continue to encourage production. We've got a big disconnect between the levels of sustainable fuel being produced for the airline industry and the mandates that are in place. And all it's leading to is fuel suppliers making even greater profits on the back of the airline industry. In Europe, what we see happening is they're adding to the price of conventional jet to cover what they call compliance fees. In other words, the penalties that they may face if they don't meet the mandates that they're required to meet. So I think regulators do need to look at this again. You know, the industry remains committed to using sustainable fuel as the key element to reduce our environmental impact, but we're just not seeing supply being made available at the levels that we require.
Willie, put it all together. Fares, what are they going to do next year? Is it going to be more expensive to fly or cheaper to fly in 2026?
No, we think yields will actually be flat in 26 versus 25. Demand will continue to be relatively strong, about 4.9% up on this year. That's slightly less than we've seen before, but still reasonably healthy.
OK, final quick question. Asia, that's the bright spot. That's where the growth is coming through. But we've started to see problems. We've seen what's been happening in India over the last few days. Do you think we can expect turbulence as these Asian airlines grow as quickly as they do? Do you think what is happening in India, the issues that have happened with Indigo, do you think we can see those replicated elsewhere? Are these guys growing too quickly?
No, I don't think they're growing too quickly. But what we did see was, change in the regulatory environment, which imposed additional restrictions on how they operate. And I think that issue, has caused a shock, particularly in the low-cost segment, which is much more impacted by some of the regulatory changes that has happened. So I think things will stabilize, Guy. I think growth is going to continue to be particularly strong in that region as they see the value of aviation driving their economies.
Willie Walsh, the Director General of IATA in Geneva. Sir, thank you very much indeed. Bonnie.
Guy, some lovely optimism there. Thank you so much. Wonderful interview. That is Guy Johnson there in London. Coming up here, jobs data and earnings on deck. We'll get you set up for your trading day next. This is Bloomberg. Now, look at what's ahead for your Tuesday trading session. In just less than 5 minutes, we get the NFIB Small Business Optimism data. That's at 6 a.m. Eastern. Plus, Campbell's and AutoZone earnings out before the bell. And Jolt's jobs numbers, about a third of people respond, but nevertheless, we will be watching that at 10 a.m. Eastern. All right, let's get to some individual pre-market movers. Nvidia winning approval to sell those H200 chips to China. It's putting on about 0.7% right now in the pre-market. Paramount extending gains after that 9% gain yesterday. It launched a hostile takeover bid for Warner Brothers Discovery. $30 a share in cash. Bear in mind, though, it had dropped 10% on Friday, so a lot of volatility there. And then Norwegian Cruise Line cut to neutral at Goldman, down about 2.5%. Analyst Lizzie Dove cites less favourable risk-reward profiles for 2026, driven mainly by the supply-demand setup in the Caribbean and the firm's outsized exposure to that market. Now let's take a look at the macro environment as we head into day one of the Fed. Look at that two-year yield up to 3.57. That's it for Bloomberg Brief.